of banking and how quaint, folks, relationships as we continue to look at all that's going on among these 5 banks. I will not mince words. Mr. Solomon of Goldman Sachs was a piñata. I don't remember when, 4 or 5 years ago. Zuckerberg was my CEO of the year at one point. And you got to give it to David Solomon, the way he turned it around off the credit card debacle.
He did.
And now we've got Goldman. What do you see, Paul, within the headlines here?
Yeah, I see some, again, what we saw from some of the other banks, but their equity revenue, like everybody else on the street, was just dominant. Came in at $7.4 billion. The consensus was $5 billion. Again, that's the biggest equity number I've seen so far here, reported $7.4 billion. And their FICC business really beat estimates as well. So across the board, some solid results. So let's check in, Tom, with Neil Sipes. He covers a lot of these big banks for Bloomberg Intelligence. Neil, the stock's up 1.3% in pre-market trading here, up 20% roughly for the year to date. Talk to us about the quarter at Goldman Sachs. What did you notice?
Yeah, I think an excellent quarter across most of the revenue lines that we're looking at. A lot of people, us included, have been talking about the very high bar, the hype, if you will, around capital markets. Well, those are the numbers we're seeing today, right? Across particularly equities trading and really across the investment banking fee lines, most notably equities and debt. It feels like a lot of that is sort of this AI sort of related and the mega IPOs, right? The debt issuance, the AI infrastructure, that's funneling through the investment banking fee lines. And obviously the IPOs provide a pretty significant boost to the equities where we're seeing multi-billion-dollar beats. Those are not typical numbers that we're seeing across JP Morgan, across Goldman Sachs. And so again, I think the question and the focus now flips towards, okay, what about the second half? Because again, the hype has been there. This is what the numbers look like. And you know, if markets hang in there and the economy hangs in there, we know there's a pipeline of mega IPOs. Goldman's investment banking backlog actually increased quarter over quarter, even with the solid results. Right. So that's a signal that, all right, maybe even better days ahead, at least across some of these lines.
I look at the ratios, how quaint. And they got return on average shareholders' equity of 23.5%. There's no textbook I know that's ever had that number. That's like almost technology returns. The 10-year per year return of Goldman Sachs is Apple-like. It's like 20-something% per year. Can they sustain that? Do you model out they get back to our normal? Or are these essentially technology companies doing finance?
Well, that's a good way to frame it. I mean, look, we know investment banking is a cyclical business. We are sort of in that upswing or somewhere on the more elevated side of things. Again, when you sort of look back at some of these banks like a Goldman Sachs, a Morgan Stanley, for example, over the past 10, 15 years, they've significantly transformed their businesses. So there are sort of pivots and pushes into those higher ROE franchises. So you would expect sort of a higher through the cycle return. Again, the second quarter, I think we're seeing some pretty elevated numbers, and you're seeing that reflected in the stocks with Goldman at 3 times tangible book, Morgan Stanley at 4 times tangible book. Returns at Morgan Stanley, in theory, could be even better, just given the sort of business mix that leans towards the wealth management franchise, which is more stable, whereas Goldman is much more heavy in the trading, which is why that equity strength today is so meaningful for them.
All right. I grew up in the equity business. If I'm an equity player at JP Morgan or Goldman Sachs, I'm walking in it's only July, but I'm walking in my boss's office today and saying, you better pay me, dude, come December. Talk to us about the expense outlook. How are these big banks dealing with expenses with this top line just ripping?
Yeah, and we should also note that, trading revenue tends to seasonally moderate throughout the year, particularly in the third quarter where you have the summer months. And sort of...
See, I'm not buying that, dude. You're my boss trying to give me that argument.
Exactly.
I'm pushing back. I said, I just killed it this quarter.
Yeah, and I think that's the question is always around operating leverage of how much of this revenue upswing in capital markets is actually going to be shared with shareholders and investors. And it looks like the compensation ratio at Goldman was actually pretty solid, beating expectations. Again, the comp is an accrual throughout the year. So it doesn't necessarily match and mirror the revenue uptick in one quarter. So that's going to continue to be the key number to watch, especially when the bar is high, the expectations were solid results. We got them, we actually eclipsed them, but how much longer does that go, and how much does that actually flow to earnings?
Okay, one final thing. 40 minutes ago, I did a study here of 2019 to 2026 JP Morgan, 7-ish years, COVID, and the growth of these banks, like on total assets, whatever, is extraordinary. Too big to fail. They just get bigger and bigger and bigger, don't they?
Yeah, they tend to get bigger and bigger, not in a linear trend, but over time, I think that's what you're seeing. And even, when you think about capital markets focused businesses, they've been leaning in with balance sheet to sort of provide these types of revenue numbers that are sort of flowing through and expected to flow through moving forward. And so what you've seen from a capital perspective is, an improved visibility over at least the next 12 months. And that allows them to sort of lean into that capital markets upswing, and we're seeing those numbers come through today.
Neil, thank you so much. We got huge news flow this morning. We'd have you for another hour. Neil Sipes with us, working with Herman Chan, giving you the best of the concept, the backstory of all these numbers of these banking earnings.